Good evening, Nick Inman here from VolumeProfileTrader.com on Monday, April 16th, and today the market was pretty flat. Nasdaq was down pretty heavily due to the likes of Apple, and which got hit on the chin today, and Google, which has been getting hit since earnings. Let's see if I can get Google on there. Alright, Google. There you go. You can see Google, which announced earnings and got hit ever since. Nearly faded the move in Google from last Friday, but kind of shied away from it and kind of kicking myself for not basically selling it, buying puts. But, you know, that's what you kind of get. You kind of take a different trade. I'll wait for a better trade, not necessarily a better trade because this was about as good as it can get, but you know, you win some, you lose some. So the S&P pretty flat on the day, but I consider it a down day really. We gapped up higher around the 13, let's call it 1375 level, and traded off of those highs and kind of stuck towards the bottom end of the range for most of the day. If you look what's going on in an hourly chart, you can see this. We have a high volume area from 1380. You could say down to 1361, or you could say down to 1364. 1364 is technically the high volume area, and then you can also condense that even more and say the high volume area is really from 1374 down to 1364, about a 10-point range, and that's kind of your bogey for now. You trade off of those levels, or you trade off of that range. It looks like this market's going to continue lower, and if that's the case, it could be going a decent amount lower. And the reason why I say that is because the more volume we get up at these levels, the less relevant, in my opinion, the lower levels become. You have more emotion, you have more money tied to these current levels. Now you're going to have some buyers and some sellers at these levels, some getting out from their long positions, some trying to buy this as if it's a dip waiting for the move higher, and some just kind of, you know, trading around this position or around this range, getting chopped up most likely. But the point is, there is a lot of action going on here, and it's actually the most relevant action in this 90-day period. And the reason why I can say that is because it has the point of control. You can see it has the most significant volume compared to any other level, so that's just something to be aware of. Now the Dow is up today, but just kind of marginally. What you can really see what's going on here is, you know, maybe you have a little bit of short-term support right here, but we have a high volume area from, call it 12,900 to 12,800, and we basically just traded into that range, got rejected from the top end of that range, came close to closing the gap from looks like last Thursday, or I should say, you know, from Friday morning, but failed to do so. Now we're trading lower, so just something to be aware of, and something to watch out for, frankly. Nasdaq, you're coming down to support here. This should be support at this 2645 level, less than 1% away. So just keep that on your radar and don't take it off, because we're closer than you may think, and it'll bounce quicker than you think. So you look for a bounce there. It's March's point of control. When the S&P hit the prior month's point of control, now I'll show you. Back in let's see, early March, we had a move from 1340 up to, say, let's call it 1410, and we had a direct move from 1340 to, call it, 1400. So, you know, there is a potential for a nice snapback, and you can't take that off your radar. Now the dollar, you know, it got beat up, or it has been beat up the past. Let's see, I guess this was today. So today it got beat up a little bit. Basically trading in a pretty decent range, broke down under the majority of this range though. The last time we had to move down below this range, it traded right back up to the top, so just something to be aware of. But if you remember, this is the triangle pattern we're dealing with. This is looking more and more interesting. This looks like it could really, if this breaks out to the upside, let's put it like this. If the dollar clears $80.40, it's going higher, and it's probably going a lot higher. Probably going to make new highs. May go up to 89.90, where is definitely some stubborn resistance. But it's just something to be aware of. If we break below that, then I would be really quite surprised, and you could see a lot more downside in the dollar back towards the mid-70s. So just something to be aware of. Gold kind of continues to trade in a range. You know, definitely the bias is to the downside currently, and you can't take that off your radar. But you're also seeing a gold market that is up year to date. Let's see if I can get it. Here's year to date. So this is kind of our bogey, and you know, as long as we really stay above those levels, you're okay on gold. You know, there's no reason not to be positive on it. Really what you'd want to see though is some type of stabilization. Now if the dollar catches a bid, that'll probably be a reason to sell gold. And what goes with gold, silver, still at the value area low for the year, has not, you know, just basically continues to trade at these levels, and when it decides to move, it's probably going to move quick because that's what silver does. You're looking at more intraday. You have high volume area from 31.75 or so down to 31.25, 50-cent range. We try to get a breakout from that range, but it's tough to trade right now. That's when you kind of look for opportunity elsewhere. Crude oil. This is probably the chart we want to look at. We're close to what should be some type of support. I don't really consider the 50-day average support. It's just kind of a gauge. When it's going up, you generally want to be a buyer. When it's going down, you want to be a seller. Right now, it's going higher, but it's definitely, you know, soon, just based off of what's been going on and how price is currently sitting, it's probably going to flatten out more. I don't know exactly. Can't do that math, nor do I care. But $100, that's, you know, you're looking for the bounce there, and if you're an oil trader, that's where you would want to see, or that's where you'd be looking for buyers to be lurking. Not necessarily want to see overall, just because it's not necessarily good for the economy in general. The VIX, don't generally cover this, but sometimes it's worth it. And right now what we've seen is, I think the last time I covered it was when it was in this range. I want to say it was in this range, and obviously the buyers came in. There was enough buying of protection, of volatility in general, to push it back up to the top end of the range, above the 50-day moving average, which has gone from trending down, now sideways. So now what do you look for? You look to see if it can push up towards, you know, the mid to low 20s. And if it can, then there's going to be a lot more fear in the market. If it can't, and we, you know, roll over, kind of look at the 50-day as your gauge. Say, if we can trade under 1750 and close under there on the VIX, that'd probably be a positive for the market. Just something to be aware of. So let's go to Apple. Apple was a name that I traded today, and I sent out a video and an explanation on how you could have gotten involved in Apple. And let's get the actual chart up. Okay. So what I was looking at on Apple was, you know, it came crashing down basically from 610 to 582. Guess what? 582 support back from March, and we got a little bounce there. So what I did was I went out when it started to bounce at that support. I bought the 585 by 595 call spread ending this week. I was just looking for a scalp. Originally the spreads were bought for $5 a piece, sold them for $6 a piece, and was in and out 20% gains in, you know, a little less than an hour. But you can see, you know, when something's so volatile and it's moving so quickly, you know, when it's basically when it comes crashing down to a major support level, which is basically the bottom end of this range that we've seen, you're going to get at least a semi-bounce. And that's exactly what we got, and it was a tradable one, profitable one. Go ahead and check out that video. It's on the front page of the website, and you can you know, see how I anticipated it, and maybe it can help you in the future with some potential trades. With that said, Apple reports earnings, I want to say next Tuesday. The next stop for this, 550. I mean, you have maybe some gap support. I remember this 578 level or so was pretty sticky in terms of support. Every time price got buy at that level, it was bought. But if we break through that level, there is no support until 550. So just something to be aware of. Medifast, let me bring up the daily chart. This continues to work. It's definitely the best trade that I've had on in the last couple of weeks. Bought it, you know, it's definitely sub 18. Now it's trading 1950. You know, I'm just going to continue to trail it via intraday lows, and if it makes a new intraday low, then I'll take some off and I'll let the rest ride with a stop at break even. But I don't necessarily think that there's any reason to sell it right now, as it has a short interest. I know when I last looked at it, it was 12 days to cover, and 13 PE with a 52% growth rate. So I think that's a recipe for a nice move higher. Agrium, I'm pretty convinced that I'm going to have my stop, which I've just kind of let the position do what it's going to do, but I'm going to have my stop below 83, which is going to be the bottom of this Donchian channel, bottom of the point of control for the year. It's also the low from last week, so I'm comfortable with, you know, that risk. And if I get stopped, you know, that's part of trading, and you know, that's your expense column. Same thing with potash. Been very frustrating couple of days. I should have just clipped the position, but I was, you know, this is a longer term thesis. But with that said, a longer term thesis doesn't have to be dead money. And you know, if we start to break below these lows, buy earnings. Definitely buy earnings. I'm going to be taking some off anyways. Looks like earnings are on the 26th. So I'd be taking at least half the position off then anyways, and, you know, reallocating whether it's after earnings or not at all. But stop would be somewhere below 42 for the meantime. CVR Partners, this is just at the top end of the range. Was positive today, ended up closing negative. You know, this could trade back down to the lower end of the range, but overall, this is a name, 14 PE with a 34% growth rate, and about 10% of their stock value is cash flow. So that's just something to be aware of. And they got 31% return on equity, so their fundies are good, and that's something worth noting. American Express, you know, Dow component. Just don't take this off your radar. Okay, I just brought it up on, this is stock charts, but I have a Bollinger Band setting here, and I was too lazy to do it on Thinkorswim. But you can kind of see the squeeze forming, still in a strong uptrend. I can even zoom out some. 1 year, 9 month, that's fine. But you can see it's definitely an uptrend, multi-year highs, so there's nothing wrong with it. But you just want to see it continue higher, basically. Let me rephrase that. I kind of just said that abruptly. You want to see it trade sideways. Let the 50-day catch up to it. Let this price level establish itself, and then see if it can move higher from there. But for now, you know, I'm fine holding a fourth of a position size or so. Hewlett Packard, basically retracing the close to the entire day move from the 12th or whatever day that was. But you're at the point of control for the year, so maybe if you look for a bounce here, but I would have a feeling that this is going to come back and close this gap. So if you're long Hewlett and you don't want to see that happen, I would recommend taking the time is selling into strength. Travelers, this looks like a squeeze here that's ready to go. And, you kind of use it. If it breaks above 60, go ahead and get long. If it breaks below 57, then don't even worry about it. I don't necessarily think it's a name that you want to be selling short, but it's a Dow component, and people are looking for some quality right now. Pfizer, 50-day moving average. The only reason I say that is because you can place your stop right around 2160 or so. That's under the 50, under the Donchian, and gives you a shot for more upside. But there's no reason to hold it if it breaks below that, because your thesis for getting in technically would be that. Now, if you're getting in for the dividend or whatever, if you want to sell cover calls against it and collect that dividend, then you just start scaling it now. Maybe sell some 22 puts at the money puts, and then if it goes down to 21, sell some 21 puts and scale in, a fourth of a position over the course of a quarter or something like that. RIM got a pop today towards the end of the day, saying management's considering strategies basically looking to exit this horrible story. And I still hold the 15 by 18 call spreads. Most of them I took off for a loss when it didn't work out back on the 3rd. But this is interesting. It's up 4% when the market's down. So this could be, still hasn't made a new intraday low. Basically closed, or got close to closing this gap. And, you call this a double bottom, and you put your stop underneath and you take your shot to the upside. Looks interesting to me. Tech Resources took some profits on this today when it was in the green. It's at the top end of the range, and I just wanted to be prudent. Take gains when I have them, because if the S&P rolls over, you betcha that Tech Resources will too. Cliffs, I think you can take a shot. Earnings coming up. I think I'm going to do an earnings call, and what I mean by that is I'm going to set up a position, generally low risk, high reward is what I'm looking for, and see if we can get a good trade on this. But we're just going to have to wait and see. If I do choose that, I will email. Walter giving you a 2.5% pullback. Kind of looks like Hewlett Packard. That's messy. You're at the top end of the range, where it's been right to be a seller. But at the same time, it was on light volume. So if we get a bounce tomorrow, maybe you go with it. There's nothing wrong with not and just holding your cash, because if the dollar breaks out of this triangle to the upside, then this Walter Energy position is probably going to underperform cash. So just pointing that out. So anyways, hope this helps. Take care. Have a good night. Talk to you tomorrow.